Hello, I'm Klaas de Vries, Associate Economist at the Conference Board, and this is your September Economics Watch Brief for Europe. The euro area economy has continued to grow moderately at 0.4% for the first 2 quarters of this year. Rising wage growth and continued investment spending will offset current external challenges to a fair extent. This means growth will remain on track for about 2% this year compared to 2.5% last year. Growth in export volumes decreased markedly in the first half of 2018, mainly on the back of declining demand from China. However, exports remain in positive territory, albeit at a slower pace. What's more, it seems like the slowdown is stemmed for now, as survey data point to a somewhat more positive picture for export orders in the second half of 2018. Can stronger domestic demand offset weaker exports? Wage growth continues to increase across the euro area and is currently exceeding 2%, well above the 1.3% on average over the previous 6 years. Households in countries with tighter labour markets, such as Germany and the Netherlands, already see wage gains well above 3%, while Italy and France are more around the euro area average. Stronger wage growth, high levels of consumer confidence and continued growth in jobs all bode well for the European consumer outlook. The downsides to the outlook remain mostly external, with continued uncertainty around Brexit and the possibility of a recession in Turkey, which could impact European exports and the banking sector. It is unlikely that a preliminary Brexit divorce settlement is agreed upon before November, thereby increasing the risk that a final agreement will not be ratified before Brexit Day, or March 30th, 2019. While Britain up to this day remains in the EU, the flow of goods and people between the EU and Britain has clearly slowed since the referendum in 2016, showing that business and consumers are already planning for an EU minus Britain. I am Klaas de Vries and this was your Economics Watch Brief for Europe.